What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great, and enjoying freedom. It's a great day to have a great day. Today, I wanted to talk about how I dropped out of college and became an investor. And I know that sounds ridiculous. It was not done on purpose. We're going to get into it, but really quick, just in case you're new, make sure to subscribe for daily videos. Subscribe to my second channel for weekly videos. Get yourself some DYDSS merchandise to help support the channel. We got the limited edition DYDSS Christmas line, only available obviously until Christmas, and a portion of the proceeds are helping us raise some money for St. Jude Children's Research Hospital. Try out some G Fuel energy formula, $5 off your first order by clicking the link in the description. And of course, last but certainly not least, make sure to go and get your up to 12 free fractional shares by downloading Webull and funding your account. Refer one friend by the end of the month, just one person you know, and Webull's going to give you all the way up to 20 free shares of Google. You're guaranteed at least one, but you have the chance of winning all the way up to 20. Link in the description. Everything will be linked in the description. All right, so today I wanted to tell the story of how I dropped out of college and became an investor. Now, I just wanted to preface everything by saying it wasn't on purpose. I didn't drop out of college to become an investor. That's just kind of how the stars aligned. And I wanted to tell a little bit of a story because when I was in college, I was paying out of pocket. I do not come from a family of wealth. I do not come from a high income earning family. That's just not what I come from. So I didn't have anybody paying for me, and I'm also highly against student loans. I'm actually against almost all types of loans. I personally believe that if you can't afford something, you should not finance it, especially something like that. So I was paying out of pocket. And my way of doing this was by working 3 jobs. It might not sound ideal. It might not even sound possible, and looking back, I don't even know how it was possible because it was incredibly different, and it feels like a completely different lifetime because I don't even remember those years, and it was actually just a couple of years ago. But I was working 3 different jobs: my regular job, a part-time job, as well as a seasonal job. So the third job was sometimes on, sometimes off. I was working these 3 jobs, and I made it through my first 2 years. I transferred from one college to a different college. I was still working those 3 jobs, and all of a sudden, surprise, surprise, 2020 happens. January was just fine. February was just fine. March was just fine until it wasn't. March of 2020 happened, and absolutely everything crashed. And when I say everything crashed, I'm not talking about the stock market. I'm not talking about this market, that market. I'm not talking about anything in particular. Planet Earth pretty much crashed. Everything completely fell apart except for Florida somehow. But everything crashed. And during the crash, I lost one of my 3 jobs. Permanently. Still, to this day, have not gotten a call for us to come back. And it's been almost 3 years at this point. So I lost one of my 3 jobs permanently. I lost one other of my 3 jobs temporarily. I lost it for a little while, then I got it back. But unfortunately, I live in New Jersey, so I ended up losing that job for a second time, and then I got that job back once again. It wasn't until earlier this year that I decided to step away, and it had nothing to do with shutdowns or anything like that. I just, moved on so I could focus more of my attention on this whole internet thing. But during the time, it was incredibly difficult. And I was in a rough situation because the college I was going to beforehand, I was on the dean's list every semester. I was doing fantastic. My GPA was friggin' higher than Snoop Dogg. I was doing great. So great that I ended up getting a scholarship for the college that I ended up transferring to. And it wasn't covering everything, but it was covering a lot. And during this big giant crash, tuition was due, and a couple things had changed. And I decided that in order for this to be manageable, I'm going to have to go down to being a part-time student. So I tried to figure things out, and I was informed that my scholarship was only for full-time students. That if I want to go down to part-time, I'm going to lose it. And I was like, well, the scholarship doesn't cover absolutely everything. I don't know if I'm going to be able to afford my half or my whatever, however much I owed. I don't know if I'm able to do that because I just lost 2 of my 3 jobs and we're in the middle of a worldwide health crisis. I don't know if it's going to be financially possible for me because my health and well-being and my family are the most important things. I'm just, in college, not really because I need to be, but because I want to be. So I had to do some thinking. I had to talk to a lot of different people. And then I was also informed that I have to start paying for campus health insurance. And I was like, well, why do I have to pay for campus health insurance? I can't have my own. And they're like, you can have your own, but you have to have this as well. And I was an online student at the time, and I questioned it. I was like, well, why can't I have my own, first of all? And second of all, I'm not even on campus anyway. Why do I need to have campus health insurance? So that was another expense that was tacked on, not to mention tuition started going up as well. So I was like, you know what, this isn't even possible right now anyway. I have more important things to be doing right now. And not to mention, this was during the crash of 2020. I finished that semester strong. We were already in March, finished that one strong. I'm talking about the following semester. I'm talking about, I believe it was starting in April or whenever it was. I don't remember off the top of my head. But I remember it was a really difficult decision for me, and the reason it was tough for me is because I'm not the type of person that, it really bothers me to not finish something that I started, even if it's something that I don't need to finish, because I was in college just because I wanted to be there. All I needed was the degree from the first college that I went to, which I had already gotten. I noticed that some doors would open up if I just transfer on over and knock out another 2 years. And I was like, all right, no problem. The degree's not going to hurt me by having it. It's better to have it and not need it than to need it and not have it, I guess. It could end up getting me a really interesting job one day. But this was also when the stock market was crashing. See, when the stock market originally crashed, I believe it crashed like 12% in a day in March of 2020. I think it was March 16th, 2020, if memory serves me right. The spot price of silver got cut almost in half. Gold came down by several hundreds of dollars, and everything was just getting smacked around and butchered and battered, and including my sources of income, because like I said, I lost 2 of my 3 jobs at the time, and I didn't really know what to do. I had to talk to a lot of people. I called up my uncle, and I said, hey, what would you recommend I do right now? And I talked to a couple friends. I talked to a couple people who work for the university, and I was like, man, I don't really know what to do, because here's the problem. I cannot afford to pay for everything that the scholarship is not covering. Plus now the campus health insurance and tuition's going up. I can't afford to pay for my fair share. I can go down to part-time, but that means I lose my scholarship entirely. During a worldwide health crisis that's beyond my control, you can't throw me a bone a little bit? You can't, you can't defer the scholarship? You can't just, put that on pause, and then when things pick back up, I can go back to being full-time? You can't help me out? And the answer was no, unfortunately. And I remember I asked the question to the lady on the phone. I was like, well, once again, we're in the middle of a worldwide health crisis, and I just lost 2 of my 3 jobs. Just out of curiosity, I want to know your answer. If I can't afford this, or if I can't figure out a way to manage this, will the university deprive me of an education? And she was like, I wouldn't say it like that. And I was like, all right, you told me everything I need to hear. So, as painful as it was, as difficult of a decision as it was, I dropped out. I had started that semester, and I had a couple days left before I could completely pull out and get a full refund, and I did just that. I got a full refund for the payment that I had made to start the semester, and I pulled out entirely. It's been going on 3 years since. I have not gone back. And coincidentally, as all of that was taking place, as all of that went down, like I said, the market had just crashed like about 12% in a day. And not only did it crash about 12% in a day, but it stayed low. It fell down, and that's where it stayed. And then it started declining even more. And now I had these tuition dollars that I was no longer using to pay for tuition, and I had a little bit more time on my hands, so I was making more YouTube videos, I was doing more online business, and I ended up getting my second job, the one of the two that I lost, I ended up getting back. So I decided, since I was already kind of dabbling in the stock market as it was, and now I had noticed that some of the greatest stocks on the planet, they've been considered some of the greatest stocks on the planet, for some of them for decades, some of them for over 100 years. I saw an opportunity to get some of them for 10, 20, 30, 40, 50% off. So I started buying in a little bit at a time. I didn't know exactly what was going on in the world. I didn't know how long this was going to last, and I didn't know exactly what my income would look like a couple of months from now. I didn't know anything. All I knew was that I had spent the last quarter of 2019 and the first quarter of 2020 familiarizing myself with the stock market and getting a better understanding and getting the hang of proper fundamental analysis and technical analysis and being able to make the right moves. And I've made mistakes, but I've been right far more than I've been wrong. And I used those couple of months to dabble, get my feet wet, and just learn. That's what I wanted to do. I wanted to learn. A little bit of trial and error and a whole lot of studying. And that's exactly what I did. So by the time everything crashed, it was just perfect timing. I had, 4, 5, 6 months of preparation and studying, and now I had a far better understanding at this point during the crash than I did prior to the crash. Then I no longer had to fork over thousands and thousands and thousands and thousands of dollars for tuition, and I had more time on my hands to be cranking out way more YouTube videos and do way more live streams and do all the online stuff that I've been doing. That really started to pick up. I run a financial entertainment channel, and during a worldwide health crisis where like planet Earth is on lockdown, people were looking for two things. They were looking for finance videos and to learn about finances, and they were also looking for entertainment. I crossed off both of those boxes on my YouTube channel, and that's when my YouTube channel really started to blow up. That's when I started really gaining momentum, like a ton of momentum, almost overnight, after a couple years of not really getting too far. But all of a sudden, that started picking up. All of a sudden, YouTube started doing well, and the better YouTube was doing, the better DYDSS was doing, which meant the better the VIP club was doing, which meant the better this was doing, the better that was doing. Everything online was going well. I got one of my 2 jobs that I lost back, so now I was still working 2 jobs, and everything was going well, and I didn't have to pay for tuition anymore. So now all of a sudden, I was like, man, I'm going to really pick up the pace when it comes to investing. Now, at the very beginning of my investment journey, I didn't know exactly what I wanted to do. I didn't know exactly what type of investor I was or what type of investor I was going to be. As it turns out, I am a blue chip investor as well as a dividend growth investor. I'm not too laser focused on growth or tech necessarily. I mean, we all want growth, but I don't really focus on the growth stocks or anything like that. I don't focus too heavily on tech. And now I'm even more so an index fund investor just because it requires so much less effort on my part. I could just automate the investing thing. But at the very beginning, when everything was crashing down and I first really started to dive in with my tuition dollars, because that's what I did. I dropped out of college and I used my tuition dollars to dive into the stock market, and I got everything at a massive discount. And I told a couple of people about some of my stock picks, and I remember getting more negative feedback than positive feedback. They're like, you picked that one? That's the one you chose? Sorry for the background noise, I'm outside. But they said to me, they're like, Of every stock you could have picked, you picked that one. Why would you pick that one? That one is going to be bankrupt in less than a year. They're going to not only are they're going to cut the dividend, the share price is going to go to zero, and they're going to be completely out of business in less than a year. I told them, I was like, I don't think so. They're like, I wouldn't have picked that one. And I was like, well, I would. And as it turns out, not only did that particular stock go up in value for me, it has gone up in value about 120%. Not only did they continue to pay their dividend, they didn't cut their dividend, but not only did they continue paying that dividend, they raised their dividend, which means I got a pay raise without even having to do anything. And on paper, I've made a stupid amount of profit. And I haven't sold anything. By the way, to this date, I've never sold a stock in my life. Never. Will I at some point in the future? Maybe. I don't plan on it. But at the moment, I've never sold anything. So all of my gains have been unrealized gains. I'm after the dividends. So moving forward, that was just one example. I've seen 225% return on certain picks. I've picked a couple of bad ones, by the way. Like I said, I've made some mistakes, but my bad picks aren't really down all that much. I'm underwater in certain areas by a very small amount. A majority of my picks, I'm up by a small to medium amount. And some of my picks, I'm up by a lot. I'm talking about triple digits, 100%, 150%, 200+%. My portfolio as a whole, even despite the downtrend that we have seen this entire year in 2022, overall, from day one to present day, I'm up over 20% overall within my entire portfolio. I'm still strongly in the green. And I use a couple of different platforms to go about investing, by the way. I've used Robinhood, I've used Fidelity, and I use them for different reasons. One that I'm really big into right now, which I talk about in the intro of all my videos, is Webull. So let me just do a quick friendly reminder before I continue telling the story, that if you download Webull and fund your account, they're going to give you 12 free fractional shares just for doing so. You could deposit even a penny, it still works. You still get your up to 12 free fractional shares. If you refer one friend by the end of the month, make sure to do this, by the way. Just click the little invite button and send it to one person that you know. They're going to give you a share of Google, guaranteed, with the chance of winning potentially all the way up to 20. Each share right now is worth about $100, give or take. So if you don't want it, get it anyway, sell it. Congratulations, that's almost $100 right there for you. For every friend you refer after that, they're going to give you 15 free fractional shares. And for every referral, they're going to give you an entry to the New Year prize board. So in January, they're going to be taking all the people that made referrals in December, picking a couple randoms, and sending them even more free shares of Google. We will link in the description. But I use Webull in a couple of different ways. I've used Robinhood, and I've used Fidelity, and I even tried out Vanguard, but I just wasn't a fan of the way that I just didn't really like the app as much as I like the other ones. But I use these different platforms for different reasons. On one, I have my Roth IRA set up. On another one, I have my 401k with my job set up, as well as an individual account. I have another one, which is for the most part a dividend growth portfolio. And I was even thinking about starting, I guess you can say more of a tech portfolio on another platform, but that's something maybe later down the road. Like I said before, I'm not too laser focused on tech. I just thought that it might be a pretty interesting experiment. But anyway, I started out by investing as much as I possibly could once I actually had a better understanding of how the stock market works and what a good decision is versus a bad decision, and how just because it's a good stock with good fundamentals and good everything going forward, it could be a rock solid 100% perfect decision today, but management could completely screw everything up tomorrow. There's a lot that goes into it, and one thing that I've learned over the last 2.5 years, because that's how long I've been aggressively investing, one thing that I've learned is that you don't necessarily have to search for the needle in the haystack when you have the opportunity to just simply buy the haystack. That's what an index fund is, and that's what I've been focusing even more heavily on over the last, I would say, year to year and a half. I think about a year and a half ago, I think it was June of 2021, I decided, I was like, hey, you know what? Every single day, rather than once a week or once a month or every 2 weeks when I get paid, rather than all of that, I'm going to set aside a certain amount that I'm just going to keep in there. And every single day, Monday, Tuesday, Wednesday, Thursday, Friday, I'm going to invest a small amount, even if it's just a couple of dollars. I'm going to invest a small, specific amount of dollars into an index fund every single day. So when the market's up, I'm buying in. When the market's down, I'm buying in. When it's trading sideways, I'm buying in. I don't care if it's red, if it's green. I don't care if the market's freaking purple or rainbow or what. I don't care. I'm buying in every single day. So because I've been doing that for the last year and a half, I've built up a pretty strong position with the S&P, and I think that would, in my opinion, I believe the S&P makes for arguably the best backbone of the portfolio, regardless of what type of investor you are, whether you're focused on growth and tech or whether you're focused on the blue chips as more of a safe haven because there's less volatility there, even during big giant crashes and recessions and whatnot. Less volatility, more reliability, passive income through dividends and distributions and whatnot. Regardless of what your strategy is, I think the S&P, or just broad market index funds in general, make for a good backbone or foundation of the entire portfolio, with an average return of close to 10%, closer to 7% if you factor in inflation. With dividends reinvested, you can expect to see a 7% return adjusted for inflation over the course of however many years. Now, obviously, there's going to be better years than the one that we're in right now. I think the S&P is down about, 18% year to date or something around there. Last year, the S&P was up like 25%. 23, 24, 25%. I don't remember off the top of my head, but the S&P was up a stupid amount last year. The S&P is down this year, but that just goes to show you're going to have some good years, you're going to have some bad years, you're going to have some average years, you're going to have some horrible years, and you're going to have some unbelievably fantastic years. And if you take the good, if you take the bad, if you take the average, if you take the terrible, and if you take the amazing, blend them all together, on average, with dividends reinvested, adjusted for inflation, you can expect to see around 7, maybe 8% return per year. So I think that makes for the fantastic backbone, and I'm going to continue making these daily contributions as I've been for about a year and a half now. Now I make those daily contributions into 2 index funds, but I'm much more heavily focused on the S&P. I love the S&P. I have the S&P as, or it's going to become at some point my largest position in my regular portfolio. It's also 40% of my Roth IRA. I just love the S&P 500. It's the 500 biggest, best, baddest companies in the U.S. all in one. You don't have to search for the needle in the haystack. You can just buy the haystack. The needle's in there somewhere. So that's pretty much been my story over the last 2.5, going on 3 years. I didn't really dive straight in during the initial crash, but I guess you could say the good news for me was, even though I didn't dive straight in, I dove in maybe like a month or 2 after. But funny enough, the good news for me was the market had continued crashing, so it was on even more of a decline. So no, I did not buy in heavily at the initial crash, but once it crashed, then it just fell even more, and that's when I bought. And there's no telling when the bottom is going to be. There's no telling, are we at the bottom right now? No, we're going to be at the bottom at the end of the month. Or, no, we're all-time highs or all-time lows. No. There's never a way of knowing for sure. So it's better to buy in regularly. It's better to buy in consistently, regardless of what the market is doing. Sure, buy the dip whenever possible. Sure, dive in a little extra if the entire market is on sale. But don't wait for the sale. Don't wait for the dip. Don't wait for the crash. Crashes like what we've seen recently aren't super typical. What's happening right now, or what's been happening, doesn't normally happen all the time. Years and years and years go by. You know, when's the last, other than what we're going through right now, when's the last time we had a bear market? We were on, you could probably say we were on like a decade-long bull market. Imagine waiting for 10 years. And guess what? We just saw a massive crash, and we're still up astronomically higher than where we were 10 years ago when you could have started buying in then. So if you wanted to start at 0, let's just say everything was at 0, or let's just say it was at 1, and you're like, no, I want it to go down lower than 1. 10 years go by, and now we're at 1,000. You're still sitting there waiting. We see this big giant crash, and we fall down to 900 from 1,000. Is that the time to buy? When we fall from 1,000 to 900? Or should you have bought at 1? 1 or 900? 900 is a lot more than 1. You could have bought at 1. I'm using fake arbitrary numbers here just to paint a picture, but it's the truth. Don't wait for the dip. Don't wait for the crash. Prepare for the dip. Prepare for the crash. Keep a little bit of cash on the sideline. Sure, keep some dollar bills. But what I do is I buy in regularly, and I wouldn't recommend doing it every single day. I understand it's a little bit ridiculous that I do that, but it's fun for me. I do it every single day, Monday through Friday, as long as the market is open. I buy into 2 index funds, and if I see an opportunity to buy some individual stocks that I already have, I will do so. I'm not interested in starting any new positions necessarily. I want to continue building the positions that I have, continue reinvesting dividends. Like I said before, I've never sold a stock, and I've never spent any dividends. They've all, 100% of the dividends have been reinvested back into either whatever just paid me the dividend or into something else that also pays a dividend. That's all I do. I just funnel it all into that, and I build something up for myself, and I've been doing this for going on 3 years now, 2.5 to 3 years, but I've really taken a much more aggressive approach starting about 18 months ago, give or take. And sure, my strategy has changed up a little bit over the course of the last 18 plus months, but for me, it's just an enhancement. I don't really change the strategy, I enhance the strategy. The goal remains the same, which is to beef up my net worth and increase my passive income and use my active income as fuel for the fire. My active income, the money that I make from my job every day, the 2 jobs that I have, averaging about 93.5 hours a week right now. And I know that sounds stupid, but it's actually true. Just worked 93.5 hours last week and the week before. Probably going to do it again this week. Get that Sunday pay, overtime whenever it's offered. Absolutely. And I use that active income that I'm breaking my back for to produce passive income so that I can stop breaking my back a little bit sooner. That's the plan. That's the strategy. That's how I've gone about doing things. Again, make sure to get your free stocks on Webull. The link will be in the description. 12 free fractional shares just for joining. A free share of Google, maybe even 20 free shares of Google if you refer 1 friend by the end of the month. If you don't want any of those stocks, just go and get them anyway, sell them, use the cash to get whatever you want, and move on with your life. You don't have to. I'm not telling you to dive into the stock market and be in the stock market long term. You could be in there for 30 seconds. That's about how long it should take you to set your account up, and then boom. Just sell the stocks that you get for free and then use the cash to do whatever you want with. Get out of the stock market if that's what you want. Your choice. But anyway, that's how things went for me so far. And like I said, from the very beginning to present day, it's really only been about 3 years in total. I've taken a much more aggressive approach over the last 1.5 years. So my journey has not been a very long one so far. I don't have a ton of skin in the game. I would never in a million years sit here and pretend to be Warren Buffett, or sit here and pretend to be the greatest investor of all time, or the stock market guru. No, I have a lot to learn. But here's the thing, I'm eager to learn. That makes me different from a lot of other people out there. A lot of people have a lot of stuff to learn, but they're ignorant. They don't want to learn. They're like, no, I know enough. Oh, I don't need to be taught anything. I know everything. I'm a genius. Yeah, a lot of people are like that. No, I'm not a genius by any stretch. I would actually argue that I'm not even very smart. I don't consider myself to be a very smart person. But I'm coachable, and I'm eager to learn. And this might sound cheesy, but the more you learn, the more you earn. So I'm going to continue doing what I'm doing. It's been working out very well for me. I am not only keeping my head above water, but I am way above water. Still up a double-digit amount overall, despite the giant downtrend that we've seen pretty much this entire year so far. I'm up by a lot still. The overwhelming majority of my individual picks have done either pretty decently or very, 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 very well. I've had a couple of duds, but that's all right. And nowadays, I'm far more focused on index funds, just for the stability and to, move along with the market. The ups, the downs, moving sideways, continue buying in regardless. It's just what I do. And as for the individuals, I'm not too laser focused on them at this time, but the blue chips that I am involved with, that I do have positions with, notice that I'm not recommending any particular stocks. That's not what I'm talking about here. I'm not making this is not a stock review video. This is not a, hey, buy into this particular stock and drive up the price for me. No, I don't do that. Very, very rarely will I talk about specific particular stocks for that reason right there. I'm not recommending any particular investment. But as for the individuals, I'll continue buying into the ones that I have. I'll continue to build up those positions. But one of my number one goals right now is to beef up my position with the S&P. I love the S&P, and I look forward to the day that the S&P becomes 40% of my regular day-to-day portfolio. See, when I created my Roth IRA, which, by the way, you can do on Webull, the one that I was talking about before with the free stocks. When I created my Roth IRA, you create that however you want to create it. You can go all in on one particular index fund or one particular stock. You could buy everything you can imagine. I mean, you're capped at $6,000 contributions per year, $6,500 a year starting next year. So you can't buy whatever you want, but you can customize it however you want. And I decided, before I even opened up the account, I was like, I structured it in a very specific way. Nobody structured it this way for me. This was 100% this was my call. I went 40% within my Roth IRA. So for every $100 I put in, $40 go into the S&P, $40 go into this other index fund, 10% goes into an international index fund, and 10% goes into a bond market index fund. So, pretty well-rounded. And I think that'll play out very, very well, especially if you give me another couple of decades to build it. So I'm going to keep on doing that. And yeah, the S&P is 40% of my Roth IRA by design, and I'm also investing in the S&P with my regular day-to-day investment portfolio, which I look forward to the day I build it up so much that it makes up 40% of that portfolio. I have a long way to go. I think I'm only like maybe 4, 5, 6% at the moment, but that'll play out. Anyway, I want you guys to head on down to the comments and let me know anything and everything related to today's video topic. I know the title of this video is probably going to get some negative attention, which is fine. Attention's attention. But what were your thoughts on the way things played out for me? Remember, it wasn't on purpose. I didn't say, hey, you know what? I'm going to drop out of college and become an investor. I'm going to throw all my tuition dollars into the stock market. That's just how it went. I dropped out of college because I had to, and I jumped into the stock market because I saw a massive opportunity. potentially a once-in-a-lifetime opportunity. And by the way, just to put a cap on all of this, I am going back to college. That's the that's the light at the end of the tunnel at this thing. But guess what? I don't have to pay for it. I don't got to pay for it. This new job that I got, the reason I have a 401k, which I had mentioned at some point in the video, I recently learned that for full-timers, and I started as a part-timer, I just got promoted at the end of October. For full-timers, after 6 months of full-time employment, they give you tuition reimbursement. I learned that. So I've been full-time for going on 2 months now. Give me a couple more months. Who knows? Maybe fall of 2023, I'll re-enroll. And my job will pay for it and I don't have to. Like I said before, I don't need this particular degree. This degree is actually for a field that I really don't even want to be a part of anymore necessarily. I'm kind of focused on the field that I'm in right now. And I like my current job. I actually kind of, at this time, I'd really like to stick with this company long term. But, like I said before, it bothers me not finishing something that I started. So, that's the reason I'm doing that. Anyway, though, I want you guys to head on down to the comments and let me know anything and everything related to today's video topic. At face value, does that sound like a very good idea? Drop out of college and become an investor? Or are you someone like me, an opportunist, a capitalist, somebody that wants to just dive in? You see an opportunity to do something, and you see something there, something that you want, so you go after it. Head on down to the comments and let me know anything and everything related to today's video topic. If you guys like today's video, please hit that like button, subscribe if you're new, subscribe to my second channel, which is my backup channel for exclusive weekly content. Go and get yourself some DYDSS merchandise to help support the channel in the biggest possible way. T-shirts, hoodies, stickers, coffee mugs, and a bunch of different designs. Remember, we have the limited edition DYDSS Christmas line, only available until Christmas. Get one while you can. A portion of the proceeds are going right to St. Jude Children's Research Hospital. It's a season of giving. Help us raise a little bit of money to help children with cancer. Try out some G Fuel energy formula, $5 off your first order by clicking the link in the description. It's December, so they're doing buy one, get one free sales periodically throughout the month. So go ahead and buy one, go ahead and get one free, and go ahead and get $5 off on top of that. Link in the description. And then finally, once again, make sure to go and get your up to 12 free fractional shares by downloading Webull and funding your account. You can deposit as little as you'd like, even as little as a penny. It still works, still counts, still get your up to 12 free fractional shares. Refer just one friend, one person. Normally you have to refer 3 people to get the prize. This month you only got to refer 1. Refer one person that you know. Click the little invite button, send it to somebody that you know, and they're going to give you a guaranteed free share of Google, worth about $100 as I'm recording this video, with the chance of winning all the way up to 20 free shares of Google. It's whatever you land on. Please, for the love of God, do not pass up on an opportunity. For every friend you refer after that, they're going to give you 15 free fractional shares with some of the most rock-solid companies on the planet: Ford, Coca-Cola, Starbucks, Apple, the list goes on. And also for every friend you refer, they're going to give you an entry to the New Year prize board, which means in January, they're going to be picking all the people, taking all the people who made referrals in December. They're going to be selecting a few randoms and sending those people even more free shares of Google. Webull link in the description. Time is running out. Do not pass up on an opportunity. And I want you guys to head on down to the comments and let me know once again, what are your thoughts on my particular story? Dropping out of college and becoming an investor, not on purpose necessarily. That's just the way things played out. That's just the way things were for me. And it was all because of the crash of 2020, which led to the greatest year of my life, which was 2020, which was followed by an even greater year, 2021, which was followed by this year, which is hands down even better than last year. So every year since the worst year many people have ever even experienced, that ended up being the best year of my life. And then the year after that was even better. The year after that was even better. And I look forward to 2023, which I'm hoping is an even better year than this year. head on down to the comments and let me know anything and everything related to today's video topic. Thank you guys so much for watching. See you tomorrow. Don't you dare stop smiling. Peace.